Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Friday everybody. Weekend is almost upon us. We have a lot to get through, so let's just dive in. And let's start with our continuing coverage of local government land use sales as they relate to the housing crisis and local fiscal conditions. We remember that recently the Ministry of Finance cracked down on the local government practice of, in the face of collapsed private developer demand, directing state-owned firms to buy land use rights as a source of extra budgetary revenue. Very much a taking from Peter to pay Paul approach to the fiscal challenge. Policymakers have been concerned that this practice would add to local governments' already sky-high debt piles, because some, in fact many, have used borrowed money to bid for the land. Chinese financial media outlet Caixin reports this week that local governments are now apparently reducing this practice, cooking their books, as the Chinese outlet frankly puts it. But in reality, it's still prevalent, and the same fiscal pressures remain. For example, in the major trade hub of Wuxi, part of wealthy Jiangsu province, this week's land auction saw a dramatic reduction in the value of land purchased by state firms. On Tuesday, according to data from the China Index Academy, local state-owned enterprises, including local government financing vehicles, brought 33% of the land parcels on sale by value, less than the 92%, 55%, and 89% purchased by state-owned enterprises in the city's previous 3 auctions this year. This is quite startling, suggesting that at times this year, even in the relatively healthy city of Wuxi, real underlying private sector demand for land had collapsed as high as 90%. While this is certainly a dramatic reduction, that is, bringing it down to 33% with this latest auction, 1/3 is still very high, especially considering that many of these state-owned enterprises, particularly local government financing vehicles, have no experience whatsoever in managing or developing land. These state firms are only holding on to the land in order to provide short-term sales revenue to their local government leadership, hoping that in the future they can resell the land, that is, the land use rights, at a profit. Put another way, local state-owned institutions are speculating in their own land and housing market in order to keep it afloat. With this latest auction in Wuxi, it would appear that the Ministry of Finance's new policy has prevented some state-owned enterprises from buying land. However, as we look closer, things become much more muddy and much more concerning. Caixin reports, citing an industry source, that some local government financing vehicles have tried to dodge the order from the Ministry of Finance, as they have paid other private property firms to buy land parcels on their behalf, thus making it appear that most of the land was purchased by private companies, when it wasn't. Meanwhile, fiscal revenues were up 8.4% year-on-year in September, the first increase in 5 months. But this was largely driven by a 39.7% jump in non-tax revenue, which analysts believe has come from the sale of state-owned assets, as well as more fines on businesses. Revenue from land sales, a primary extra budgetary funding source, continued to sink in September, down 26.4% year-on-year. Regular tax income at the local level only increased 0.4% year-on-year in September. Okay, next up, with Xi firmly in his 3rd term, as anticipated, both China and Russia have more openly expressed their mutual closeness. In a speech this week, on Thursday, Putin criticized the United States for destroying relations with China by sending, quote, "Grandma," end quote, referring to House Speaker Nancy Pelosi and other US officials to Taiwan. In the speech, in which he warned that the world is in the most important decade since the end of World War II, he also expressed that Taiwan is part of the People's Republic of China, that Xi Jinping is a, quote, "close friend," end quote, that Russia's relations with China were at an, quote, "unprecedented level," end quote, and that Beijing had not been warned about the Ukraine invasion in advance. A recently promoted Wang Yi also spoke with Russian Foreign Minister Sergei Lavrov yesterday. According to the PRC readout of the call, Wang, employing very unambiguous language, expressed that, quote, China will also firmly support the Russian side under the leadership of President Putin to unite and lead the Russian people to overcome difficulties, eliminate disturbances, realize strategic development goals, and further establish Russia's status as a great power on the international stage. End quote. He concluded that the bilateral partnership will, quote, provide more stability to the current volatile and unstable world, end quote, and, quote, any attempt to stop China and Russia from marching forward is doomed to fail, end quote. Now, before we move on to the next section, interestingly, this week too, Zhou Bo, a retired senior colonel in the People's Liberation Army, who is still based in China, indeed he is a senior fellow at the Center for International Security and Strategy at Tsinghua University in Beijing, published an op-ed with the UK outlet The Financial Times, in which he called on China to, quote, use its leverage with Russia to prevent a nuclear war, end quote, expressing that, quote, if Moscow decides to use tactical nuclear weapons against Ukraine, China can hardly maintain its support of Russia, end quote. Next up, the economy. Hey guys, if you like what China Update is trying to do with these videos and you'd like to help me keep it sustainable, Patreon and Buy Me a Coffee links are in the description below. As always, this is the best way to help me continue doing this channel every day. If you're enjoying this video in particular, don't forget to hit that like button too. As always, thank you so much everybody for the ongoing support. Okay, next up, the Chinese economy. There's been a lot of pessimism with China Update videos this week on the economic side, but it is not all doom and gloom. For example, yesterday, Thursday, US manufacturing giant Boeing released a bullish 20-year forecast for China's commercial jet market, projecting that China would need over 8,400 new passenger and freight planes valued at $1.5 trillion through 2041. This would represent a doubling of China's current fleet over the next 2 decades. If the forecast is accurate, the China market would represent more than a fifth of global aircraft deliveries over this period. Like I said, the forecast is quite bullish, in contrast to the more pessimistic forecasts of future Chinese growth among economists, which we explored earlier this week. Quote, we have full confidence that China's commercial aviation market will continue to prosper despite recent economic headwinds. China's economic fundamentals will continue to fuel the significant demand for both its passenger and cargo fleets. End quote. Next up, the markets, as fickle as ever, have rebounded somewhat since their historic crash on Monday, with Chinese technology stocks from a very low base leading the gains. We remember on Monday, the Hang Seng China Enterprises Index, a gauge of Chinese mainland equities trading in Hong Kong, plunged 7.3% after investors were spooked by the signals sent by Xi's 20th Party Congress and a new Politburo Standing Committee lineup. Indeed, citing, quote, heightened volatility and equity risk premium, end quote, due to the Party Congress, this week Morgan Stanley's strategists heavily reduced targets across key equity gauges for the Chinese mainland and Hong Kong. The Hang Seng China Enterprises Index gained more than 3% early Thursday. The rebound was likely helped by the declines in the dollar and treasury yields. Analysts caution about getting too excited about a possible stock market run, though. Quote, the rebound is simply because stocks are cheap and oversold. But for any sustained rally, we need to see real catalysts from China. End quote. Now, before we move on to our final story about Taiwan, and finally for the economy, pork profits are up. Bloomberg's Hong Kong team reports that Chinese pork producers have reported solid profits for the third quarter, as, quote, expectations of tightening supply and increased seasonal demand continue to drive a price rally from April lows, end quote. China's largest pig farmer reported $1.1 billion in net profit in the third quarter of this year, reversing 4 consecutive quarters of net loss, which the company, Muyuan, attributed to the 148.8% year-on-year jump in the value of its hog sales in the quarter. as the average price per kilogram of live pigs rose 66.1% from the same period in 2021. We remember that pork is China's most popular protein. Several other major pork producers saw healthy profits attributable to shareholders in Q3, with their share prices enjoying nice bumps this week too. Bloomberg writes that pork prices have been on a roller coaster over the past few years in the wake of African swine fever, and as weather disruptions and Russia's invasion of Ukraine introduced new volatility into global grain and oilseed markets. After reaching record highs in 2019 and 2020, as African swine fever decimated herds nationwide, pork prices plummeted 30% last year as pig farmers rapidly restored supply on the back of hefty government support. Pork prices dropped a further 33% year-on-year in the first half of 2022, according to the National Bureau of Statistics. The monthly average pork price rose each of the 3 months to September by 20.2%, 22.4%, and 36%, contributing significantly to consumer price index increases. And finally, one brief but not unimportant matter to mention. This week, United States Secretary of State Antony Blinken has once again expressed that the People's Republic of China has accelerated its Taiwan timeline and that the US needs to be prepared for this going forward. We discussed his first warning on this theme a few weeks ago. Speaking at an event on Wednesday this week, the Secretary of State expressed that China has decided that the status quo of Taiwan's situation is no longer acceptable and has begun to ratchet up pressure on the island, including holding out the possibility of using force, and that China has altered a decades-old basic understanding between Washington and Beijing that its differences with Taiwan would be managed peacefully. Quote, "What's changed is this: the decision by the government in Beijing that the status quo is no longer acceptable, that they wanted to speed up the process by which they would pursue unification." End quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Hope you have a good Friday and have a good weekend planned ahead, and I will see you all tomorrow.